The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. Dow's up 30 at 18,987, having hit the 19,000 magic number. These millennium numbers, they're brutal. Sometimes, remember the hats for 10,000, hats for 5,000. I mean, this is really something. And it's really 20,000 that you're going to have an incredible celebration around the world. But we haven't got there yet. We're at 19,000. S&P is at 21.99, up $1.52. And let's go through a couple of things here. Let me do this. The E-minis are up 4. They hit around number 2,203. Let's see, that was maybe midnight. I think it was midnight. Yep, right on midnight. And they've been pulling back ever since. A fantastic move. Look at the week. This is the 120-minute chart. This is the monthly chart. A leg C. Very positive, says it should go to at least a D. The weekly chart, that's the question. I'm going to spend quite some time. Everything about it says that this should be a new leg, A to the upside, not an E, but I'm not going to take that for granted. I'm going to do my homework and we'll come back to it. Let the week play out, maybe even next week. There's plenty of time to decide. We'd have to crack 2150 to start saying, uh-oh, I should have made a decision much earlier. At this point, it's acting very well at 2196, up 3.50. And the daily is only a leg B, and it should go to a C and a D. I would not be shorting right now. Well, maybe for a near term, if you want a quick trade, maybe yes. But I'm really looking at this and I'm saying, if the Chapman wave is to continue working as it has for so many years, so many decades, in this pattern of looking for the lowest, most obvious lowest trough, and then merely counting each successively higher peak, we should see at least a peak D to the upside in the weekly chart, in the daily chart of the E-mini. If you look at the SPX, that's the cash index, SPX.X, that's the S&P 500, leg B, now a little bit of a red candle, having made a new all-time high today, 2203.56, trading right now at 2199.46. This, again, is E/A. This one actually has more of a look to it as if it could be an E rather than A, but that's fine. We're going to deal with it. And when we get those Ds in the S&P and the other indices, everything's combining, and the Dow will probably be at maybe an F. We'll talk about shorting and whether it's a very quick short-term trade, not intermediate, but short-term is one thing, whether it's intermediate is another thing, but we haven't got there yet. Leg C in the weekly chart. What am I talking about? I need to do this because we're always having new folks listening to TFNN. Oops, that was the wrong one. I didn't mean to do that right yet. Let me go right there. Okay. What I'm talking about is that within the Chapman wave methodology, a concept that I just developed, and really it evolved, and then it became clearer and clearer over a period of time when I used to hand draw charts. I found that there was a peak that went to the fourth highest peak, and then a lot of different things happened. Well, that was using a ruler and pencil on graph paper, and it was a straight line because I only got the closing price. I only put in the closing price. I got the others, but I only did the closing price. It was a fascination to me when the computers came along and we started to get these candlesticks, these whole bar, they weren't called candlesticks then, they were called bar charts. And I got the same pattern, even though you had high lows and lower lows and so et cetera. It was very different to the price point that I was looking at. If you're looking at mutual funds, those daily charts only have the close, then the weekly has the full bar, it tells you the range of the week. Well, that's what I was dealing with. And this is what I dealt with. You look for the most obvious lowest low, and you merely count each successively peak. At 4 peaks, that's uppercase A, B, C, and D. D is where other things can happen. That was your prime objective in the Chapman wave, to get you to a D. And then I discovered other techniques that help you to assess where to go. We'll talk about it in a moment. There's a question in the den. Peak D in the den says, Basil, would you advise a subscriber who was lucky to have bought the steel complex a few weeks ago, AKS, SCHN, Schlitzer Steel, AKS Steel, and ex-US Steel, buy, sell, hold, or sell and wait to buy back? I'll discuss that because that's a great question. So the S&P has borders right now of 20. I would say the 2207 to 2211-ish area could be a top of significance in the short term for November. If next week we start to make that leg D and then a peak D. On the downside, we've got all the way to 2178 with the 9-period moving averages that hasn't even come close yet. So on a shorter term, I'd say 2187 is probably that area is where you start to say, uh-oh, something else is going on. Let's go on. We've got the QQQ series. The QQQ series is the NDX 100 Power Shares Trust Series. In a gray leg B to the upside. Why do I call it gray? Because I actually type it in gray and it's below the 119.66 high that was made back on the 25th of October. And the MACD is good. The stochastics at 91%. It too should go higher. It should challenge the 119.66 level. It's already hit 119.19 today. So this is very good action. It's the weekly chart that's going to be a big question. A powerful spike into the 121 or higher says, hey, this is a brand new move to the upside. A failure with a failure that goes to like 120.30, and within a week or two, it's down at the 117.60 area. Says, uh-oh, that's a G, and you're going to take a little time now. In the meantime, back at the ranch, the monthly chart is really strong. It's in leg B. No new high this month. Well, we should do it. But if you don't go above 119.66 in all of the rest of November, that will be a peak B. I think it will be a leg B and extend to the upside. Let's go to the IWM quickly. IWM leg B, little doji candle, 98% in the stochastic. You hardly get higher than that. 98 to 54 is really spectacular. All that you can do now is settle down in the high 90s, mid 90s to high 90s, or you start to turn around. At this point, it looks like it'll go on into next week with higher highs. So the IWM Russell 2000, fabulous. The monthly chart, what a bar. If we can close anywhere above 131 for November, I'm not sure we'll be able to do that. But if it's possible, that'll be a great candle for looking ahead, saying that the IWM should go to leg C and then D in 2017. If we want to go to, I'm going to just quickly go to gold because gold's been struggling. Last night it was up about 11 or 10. Now it's up. No, now it's down. It's at 1208.9, down 1. And what we're looking at is it's just struggling. The technicals, as I said yesterday, I kept getting questions about, do we buy the GLD? Do we buy the DDD, the GDX? And I said, no, I think that the dollar is just too strong right now until I see real weakness in the dollar. And this could only be leg A, maybe in the dollar. I don't know. It's going to be real tough to call. We need another new recovery high in the dollar for me to say, great, that's a B, and we should be going to a C and a D. In the meantime, gold is it's really acting very poorly. It's what I've been talking about for a while. The TLT, the bonds, down 5 cents at 121.10, struggling here, and it's really the weekly candle that is the powerful down move. The tide has changed in the daily and the weekly. That monthly, the tide is real close to changing. What am I missing? Of course, I want to show you the dollar. Here it is. Dollar is down. Oh, it's now up 19 cents at 101.23. The dollar, talk about King Dollar. This is King Dollar. I'll be back. 2026, Basil Chapman.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yes, so I was asked about Chico's. Where did that go? Oh, Chico's right over there. So it says Burlington Northern. Oh, no, Burlington. That's a close. That's the Coke factory, I believe. And CHS and Walmart. Okay, real quickly, because this is very important. Thank you so much for bringing that up. The daily is in a buy mode. The weekly is in a buy mode. The monthly, it's gone from a sell mode to maybe a buy signal. I just need a little time to actually make that kind of decision. But what's really important about this is that I had looked at the RTH index, that's the retail index, and I looked at the over the weekend for subscribers, and I looked at the Amazon. And I must tell you that a lot of work needs to be done right now, because we're not talking about the factories. We're talking about the actual retail stores. And if Chico's is starting to see buyers, I must say we were there the other day. Last year I thought the colors and everything, the designs were fabulous, like I really know, you know what I mean? Anyway, that was my opinion. This year I thought they were so dull. They were just lousy. But then, of course, the stock didn't hear what I said, because it is trading up $1.65 at $15.64. So let me see if Francesco's, I talked about this the other day. Oh, look at that. So that means the XRT might be doing quite well. So Francesco's is holding nice. It's not great, but it's holding way better than you'd expect. Francesco's holding core. Let me go to the XRT. XRT, and then I want to go to our callers. XRT is now improving a lot. Let's go to RTH. Also improving a lot. Whew, God, saved by the bell. I must say that just 2 weeks ago they were looking terrible. We're in Amazon, and now I want to go to the callers. Amazon, not bad. All right, let's go to Anthony in Asheville, North Carolina. I just sent a package to North Carolina moments ago. Hi, how are you, Anthony?
Good. Hey, make it quick. What's the minimum you can deposit?
Just ask a question again. Say it again.
What is the minimum that you require to open an account?
In where?
In the options.
In options. My thinking, as I recall, it's 5,000. I think that's a minimum. It depends. Really depends on the brokers, and it depends what kind. If you do it at a company, you already have the account. You know what I'm going to suggest? It's kind of not my expertise that, because it's a while since I opened accounts. I do have accounts. So I don't want to be talking at cross purposes. And my Stocks and Commodities magazine had a whole bunch of things to do with opening accounts, but I don't recall what they said about the actual figure that. You see, they need a cover. They need to know that you have capital and that you can expend that capital and you have some cushion. So unless someone in the den can just give me a quick shout out there to say they know, I think that to my experience, 5,000 for futures and options, I think that's usually the case, but I might be wrong. But I would you know what I would do? Do you have an account now that you use for your broker?
Yeah. Well, right now I've been with FXCM for 10 years, and I'm still with them. FXCM, but they don't trade options.
Yeah, you do want someone who's going to give you a really good price. You know, in the day when I started with options, you know what it cost you? I might be wrong, but I don't think I'm wrong when I say it was like 25 or even $30 to do it. So yeah, you are trading a very inexpensive thing, but your brokerage fee could kill you. So I'm gonna make two suggestions. One is we have Think or Swim here at TFNN. They are a sponsor. Why don't you give someone at Think or Swim a call and just kind of speak to them about it. Say, what would I do if I want to do? And they have the show after mine is the Options Hour. It's they call it the Swim Lesson. It is a fantastic. I'm sure you've heard it. It's a fantastic options program. So why don't you give them a call? And not only that, they give you very good option streams. I've seen it when Tom pulls them up, and others have pulled it up. I love this stream. I have TradeStation. It's good. It's not, for my own purposes, it's not quite as convenient as I like just on the system that I'm using. Some people love it, but I would recommend just calling them up, asking them what it is, what are the conditions, etc. And what's the minimum that you got to keep in the account? Can that 5,000 just be the entry point? And then if by mistake you make a few slips and you're down to 3,000, is it still actionable? Can you still use it, or have you got to maintain that 5,000 balance all the time? Those are the questions that I would ask them.
Okay, can you give me their number?
Think or Swim. You know what? I'm going to do this. I'll tell you right now. I'll do that for you right now. I'm going to go to, here we go, Think or Swim. There we go. Think or Swim. And I'll put telephone number. It's probably an 800. There we go. Think or Swim platform. There we go. And we're going to find out for you. Innovation, trading, collaboration, learning, contact. There we go. Contact, open a new account. It's all online. You know what? I'm going to do this. I should have. Oh, yeah. Get all the innovation, Think or Swim Plus up to 600 with a TD Ameritrade account. Oh, they don't. It drives me nuts when you go to these platforms and they don't immediately have a contact number for someone who would just like to call them up. I don't have it. I'm sure I would be able to get it during the break. So if you're listening to the show, I will get you the number. And there it is. Jay says 866 766 4015.
4015.
And you tell them that you're a Tiger Financial News Network listener and you were advised to call them because you were interested in options. There you are.
I appreciate it. You've done more for me than any of these outfits have.
Great.
I'm going to ask you one real quick question.
Sure, fire away.
A lot of these companies are in England or in Europe or offshore.
No, this is here. Thinkorswim is an American company. TD Ameritrade is called.
Okay, I know that. All right. That's what, because I don't want to deal out of the United States.
None of us want to do that. You want an American company for sure.
Right. Okay, I appreciate it, sir. You really helped me out a lot. Okay?
My pleasure. And keep listening to TFNN. Good luck with your options.
Okay. You take care, sir.
Thank you. Thank you, Anthony. Have a great Thanksgiving. Let me know how it went, okay?
I will do it. I promise you. Okay?
Thank you. Thank you for calling. Let's go to Ken in Kansas City. Hi, Ken. How are you?
Good morning, Basil. I'm very good. I talked to you last week about this IIM. You wanted to look at it again today?
That's Invesco Insured Municipal Income Fund, trading at 1443. When you called me, I think it was at about 1450 or something like that, right?
Yeah, I think it's gone down a little bit. Yeah.
Yep. We'll be back with Ken in Kansas City. We're looking at IIM, and we're going to discuss the Dow's up 28, S&P is up 0.39, having made a new all-time high. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
We're back, and just if you're looking at the 10-minute chart, we had a peek in the Chapman wave right there. I'll be discussing how you can identify these, and we've come down ABCD, recycled ABCD. Now we're going to another This is an F/B, F/C right now, probably going to a G, and that could be down at the 2193 to 92 area, and we're at 2194.25, and that's very important because today is the day that I said that this morning we should see some kind of a high and start to pull back. After that, to my subscribers on my opening call. And I'm going to go right back to Ken in Kansas City. We're looking at IIM, which is right there. This is the Invesco Insured Municipal Income Fund. Now, basically what we're looking at is a vehicle that traded up to the 1792 level back in July the 1st of this year, made that A formation, that uppercase A that I talk about, the Eiffel Tower, straight up, straight down. It's coming down very sharply. Took out the left side low of importance, and now it's going for the next low, which is the 1402 level back in June of 2015. Hasn't got there yet because the low so far is $14.16. And I had said to Ken when he called maybe 3 days ago, I said, you know, I'm looking at this. It should have a bounce, but my eye says, and the technicals say that it's not quite done testing its lows. Now, with a low of 1416 on the 14th of November, having jumped up to the 69 level, 1473 level on the 17th, and come back down, it's starting to show a little bit of a basing in the MACD, the moving average convergence divergence. There is a positive divergence between the stochastic, which was much lower in October than it is now, and the price is much lower now than it was in October. So that's a positive divergence. Two things that I want to talk about. One is, I said to subscribers this morning, we once had a telephone which we bought last year in December, and we sold it a month or so ago. We bought in the 34s, it hit 43, and then it pulled back, and we got out, I think it was at 40, for a very nice gain, got the dividends and all. And I thought this morning that we might want to go back in. It actually bounces up 49 cents, but it has a little bit of the characteristics of this IIM. You know, it's funny, I couldn't remember the IIM, although I'd written it down somewhere, but I had the pattern visualized in my mind, and I said, gee, I've seen this pattern before, and that's the same pattern. So I'm going to do this because even though I need to see legs C and D in the S&P, I think we're a little toppy right now. I should say we're in a phase that's a digestive phase, and that's probably a choppy phase. And because of that, now I'm thinking the upsides are going to become a little bit more limited. And I'm thinking that if I look at the TLT, it's not giving me a sign yet of strength, but it's giving me a sign of trying to form some kind of a base. There's a big difference. A sign of strength would say, if there's any trigger to move to the upside, it should be a snappy, very quick move. And the TLT, the 20-year Treasury bond iShares, should move very quickly into the 125. They're at 121.18. They should move into the 123.5, then 124.25, and then at some point touch the 125s before they come back down. And there's a lot of resistance in the 122s. So I'm trying to relate that now to the IIM. And I'm going to make the suggestion because I know you have patience, but I know you also you're prepared to wait to buy. And then once you've made your decision, usually you're prepared to give it a little bit of room. And if that's the case, I'm going to make the suggestion that at 1441, you just start realizing that the monthly and weekly charts are really poor. This has a chance for a percentage move. And the reason why I say it is that I'd make the risk very small. For instance, it's trading at $14.41. The low today was $14.33. So if I gave it 2%, so that's 28 cents. It sounds silly to give something 28 cents when you're talking about $14.41, but you're really looking for almost a 10% rally. I would still be very disciplined, and I'll tell you why. Because if it's able by Friday, that's 2.5 trading days. If by Friday it's able to close above 1462, then it's probably going to tackle the high of 1473 that was made on the 17th. And in fact, it's probably going to go a little higher. So here you are, you've got yourself a 20, I'm making a little, you know what I'm saying? I'm saying to you that this is about the area where it's made sideways moves before, but the technicals are a little bit stronger now than they had been. And I'm thinking that the market is getting a little bit toppy. And even though I'm expecting a leg C and a D in the going into the end of November in the S&P, maybe this is a chance just to test it. And I'm going to say to you, at 1441, I would just buy a very small, I really mean a nibble. You're getting a feel for how it's responding now intraday for the next week, hopefully not breaking. In fact, I'm even going to say to you, you could make the stop underneath the low of yesterday, which was 1426. I don't know what you want to make the stop. I'm just going to say, if you want a nibble, you can have a little wider stop, and it's going to give you so much information, and I'll explain to you why. Because the MACD is trying to turn, but it could deflect lower. So therefore, I don't even want any part of this thing if it breaks under, say, 1424, because then it's going to test the 1416 low, and if the stochastic is 17%, if it's going to go down to 12%, it'll take this down much more. It'll go below 14. So this is a great opportunity.
If we have a interest rate hike, won't that put a pressure on the downside too?
It'll go down further, but I got a feeling they're going to have no choice but to stall, because you haven't even got your new president yet. So I think they're going to have to stall for a little while. Maybe not. Maybe they're going to say, we've discussed it with incoming president. Well, I don't know what they're going to do. Everything about it says that the interest rate has already gone really high. Not historically, but I'm just talking about the most recent rally. And it's kind of holding at the top, but the MACD is very high. Stochastics at 93%. Now it's starting to make lower highs. And I'm just thinking that there's a chance that the TYX, which is the 30-year T-bond interest rate, could be here. It's either a G or G/C. It's getting real close to at least pulling back some. Yeah. So so what I'm saying to you is, in fact, you don't even have to buy it. You could just now I put it onto my trading system, and I just have it in. If you can take it and put it in one little square on your screen, so it's showing most of the time, it's going to give you a lot of information. You could also just do that with bonds or the TLT. It's the same thing. And all I'm saying is that this is the time that if ever there was an opportunity for at least a bounce, this has to be it right here. But if it's unable to do that, then rates are going to stay at least for another few weeks in this rectangle formation. I actually think that's what's going to be. I'm changing my mind. I'm just going to say, why don't you watch it? I don't know if it's worth actually getting into it. Okay. That was a long analysis for no reason. I'm going to say, hold off. We'll look at it again maybe next week.
All right. If you have a chance, we can take a look at BWXT.
EWXT?
Yes.
Okay, why don't you hold on and we'll look at that together. I'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Is Ken still there? Hi, Ken.
Yes.
Yeah, I missed it. What was the symbol?
BWXT.
Oh, BWXT. All right. Oops, I'm hitting the wrong place.
It's a technology stock.
Okay, BWXT. Did I just type it correct? I did. There we go. Oh, yes, very nice. So, are you long this? This is BWX Technologies, Inc.?
Yes, I bought a few shares at $35.90.
Okay, it's trading right now at $39.94. It's made a peak A, peak B, a peak C in the Chapman wave, and it's got the pattern that I talk about, which is the Chapman wave falling axe formation right there, a declining tops with much lower lows. If this thing can get back to 40.63, let me give you a second here. Well, first, if it can get to 40.26 in the next 2 sessions, it says it's going to go to a leg D about 40.66. And at that point, what I would recommend to you is if it's just a swing trade, I would start to exit at least 2/3 of my position and keep 1/3. If it's more like a core position, I would keep my position, the core position. I'd get out of maybe a half. You could even get out of 2/3, but I want to put that back on the next sharp pullback. And 38.84 is the 9-period exponential moving average. And if it had to go under that, I would say the 37.81 would probably be the next level of key support. I like it. I think it's looking very good, and it's an IPO back in 2015, and this is leg D in the monthly. I'm always shocked at how many times IPOs, no matter what they do, at a certain point they go to a leg D in the monthly. It's almost as if you can buy them, put them away, and just wake up one day and say, ring a bell when you get to that 4th highest peak. So I like it. I think if it's possible that you're able to keep your core position, you must have bought it just off the low, straight after the election, because it's just been straight up. And now it's taken 5 days to consolidate, 6 days to consolidate. I like it very much. I'd be a little cautious if it failed. And by, what's today, Wednesday? Wednesday. Today's Tuesday. If Tuesday a week, this thing is taken out, 39 as support, and it's under it, I say, Now it's stalling a little bit. It's going to take a lot of effort now to make that leg D. It should do it when it goes to all-time highs. Usually the daily goes to a D before it turns around when it's going to an all-time high. So I like it very much. I'm going to put it on my list here just as a watch stock, because BWTX trading at 39.95 up 25 cents. Nice action. Congratulations. Good eye, Ken. What brought you to the stock?
I was just looking at the computer and then ran across it.
Well, it's doing very nicely. So, and the weekly chart, I must just double check. I don't want to talk out of turn here, so let me just take a second. Right there. Yeah. So that's A, B, C, D, E, F, G, pulls back. A, B, C, D, E, F, G, pulls back, and yes, you knew A. Oh. This might, I don't want to talk out of turn. It might be starting a new weekly move to the upside, but all I can say is that the action so far has been absolutely fabulous. It's had, in all the time since its IPO'd, it had just one ugly week, and that was the week going into the election. It went from a high of 39.34 to 36.16. I like it very much, and I'm just going to say to you that it is an IPO in the sense that this is the first monthly move to a D, and therefore I'd be a little careful that if it started leg D in the daily by going above 40.66, I would definitely take something off and say, hey, nice, that's that. And you can even take as much as half off, because I think it would have some kind of a pullback, and you can buy it back 2-3 points lower at least, and you've got your core position. If it goes to the 41s, I don't know if it's going to go back to 35 for quite a while. Hey, nice, good eye. Thank you for calling with that.
Thank you so much, Basil. You have a great weekend.
And you have a great Thanksgiving. Thank you. Folks, and let's just do this. I want to talk about this webinar that I've got coming up. Now, you know how many times I talk about Ds, I talk about patterns, I talk about these things. I'm going to do this here. I want to show you the E-mini 10-minute chart. I spoke about that peak F. It pulled back from the high, double top high at 22.30 on the 21st. That's at 22.9 yesterday. And it starts pulling back last night, and it pulls back the 10-minute chart, and then it pulls back. And I had already drawn in this dashed line to show that it was making lower highs and lower lows. And I had already drawn from the low that was made right here at 21.92.00, round number low, on 420 yesterday. I put a left side, right side price time match. It got there a lot quicker. Actually, I had one a little shorter. I was trying to do it quickly. Just before my show started, I extended it a little bit, but that's fine. But that was the target, and it hit that target. Look, the low was 21.92 round number, and what did it just do? It went to 21.91.75, took it out by 25 cents. This is an F/C, and now it's trying to rally. In the webinar that I'm going to do, starting on December the 6th, this is a series of webinars. They're in concert. They work together. And the first one is just going to be a real basic. What are we looking at? The naked chart. We're looking at identifying the low, counting the peaks. It's not the most important thing in the world that you learn how to count the peaks. It really helps. Those people that do it know it's a fantastic technique. But the other thing that I'll be showing you is what happens in the different waveforms, the arch formation, how you can count left side to right side, how you can look at, let's go to something else, how you can look at the relationship of using just, in this case, the 200-period exponential moving average, and then a couple of smaller, shorter moving averages, how you can use those, how you get this unusual leg to the upside that's G/C and it fails. Just look at the trend lines. How can I draw trend lines? Where are they important? What do they do? I love the fact that it's going to be the basics, and then just slowly 2 weeks later, I'll give you exercises. You'll have my newsletter. You'll be able to follow the waveform as it's going. You'll have my newsletter as you're doing the course, for the series of the course. The sooner you start, the sooner you sign up, the better it is. And then actually, if you become a subscriber, then you get a discount. I mean, this is I really made it a worthwhile venture financially, because I love doing these things. I miss doing them. I used to do them a lot more. And it's just something that's very important. And what about Ds? I mean, we spoke about how many months I've been talking about. I think we're going to make a leg D in the monthly chart, a monthly chart, months and months and months we're talking about in the monthly chart, and we've gone to leg D. its leg E in the weekly chart if there's no new high above 101.48 this entire week. That's going to make a peak E. And then there are other things can happen. Hey, wait a minute. What about the stochastic? What about that thing? Look at this. If I go to, say, the ES Mini, look at the daily chart. This is called the Chapman wave squash. What is the implication? What in the heck is a Chapman wave squash? I'm going to be discussing that. The implication is that in a Chapman wave squash, the torque of the stochastic is so powerful that it takes the price that you're following up very quickly, and you go quickly A and then B, and then you can even go to a C. And the momentum keeps going higher, the MACD. And then the torque just starts to fizzle. And the MACD has to take over to be able to take you to a leg D. That's what we always look for. Look at that D at 2185, round number high in the E-mini chart right there. D, and we had our sharpest pullback from 2185 to 2078 into the November low. I'll be talking about that, and I'll tell you a little more about the webinar. In the meantime, Dow's up 60. Be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, we're only got a very limited time, and I will be back to be interviewed by Tom this afternoon, and I'll see you tomorrow morning. Now, this is going to be really important. I had a question about TIPS. This is the TIPS. This is the iShares TIPS bond ETF. I used to think it was related to inflation. I have to tell you something. I learned a long time ago. In fact, it isn't related to. It's I don't know why they used to call it inflation-related bonds, but it's just something. I don't know what it is, but it is not. I don't think it's related to inflation. But in the meantime, it's acting just like the TLT and gold, the gold index. My thinking here is that, just let me do this quickly because I got a bunch of questions I'd like to answer. That the Dow is in leg C. I see a pullback over the coming few days, and then a modestly higher D that goes into the 19,000, probably closes in the 19,000s. But the S&P has to catch up because the S&P is behind. The S&P is only in leg B right now. It still has to make a pullback. It has to have a lower high. Maybe that's tomorrow, and then it goes higher C, and then maybe next week sometime we get that D, and maybe the Dow's at E. And then I think we start to look at the downside. And the IWM question about that, same thing, little doji candle here. I think there's most of the 120-minute charts have gone to D and E, and that's as they already, as you saw in the E-mini, they're ready for some kind of a pullback. That's number one. Number two is I don't think the VIX is going to skyrocket until I get my major daily sell signals. You can have a little bit of a bounce here. That maybe will correspond if bonds rally a little bit and gold rallies a little bit. But I just think this is not the move. This is not the bigger move. Okay, that's out the way. Then a question about Vale. Well, Vale is a Brazilian iron ore producer. Is doing very well. If you're along this, I would start to think of just taking a little bit off that you want to put back in another 3 weeks' time, maybe at 808. Let it come back to the keep your core position, and let's see what happens if it comes back to $7.20 to $6.75 in the next 2-3 weeks. Do you want to add to that? That's the way I would look at it, but it's already looking good, but a little toppy, like many of the other indices. Question about OIH. OIH is acting pretty well. Yeah, it's gone to leg A, B, C. I think I'm going to go to USO. This is the one I've done. The USO is in leg B. It's pulling back a little bit. I still think that crude oil is in the trade 48s, in the 48.50 to 44s trading range. Oh, it hit 49 something. Yeah, I still think it's kind of in the trading range right now. And here's the one thing that I was asked about, the steel. So if you go to SLX, I'm going to make the suggestion then the steels, I'll do a lot more tomorrow. I'm not going to do anything today, but what I am going to say, if you've been as in the den, one of our denners said, did I read that earlier? Yeah, he said that he's a subscriber, and I featured the steels, etc. He bought the steels, and he's done very well. I'm just going to suggest in this area, you can take a little bit off your AKS, your X, take a little bit off, but just a little bit. I think it's not quite done going up, and then I think it's going to have more of a pullback. So in this area, this is where you can start to, don't add, just start to take a little bit off. So I think I've covered a bunch of things that were very important. I just want to go through this one more time. So TFNN, go to the front page, you'll see simple technical tools to analyze charts. Believe me, I'm going to make them, I use them all the time, very simple trend lines, arches, V-shaped patterns, and we'll practice them throughout the 5 weeks, beginning over and over and over. From the very first session, I'm going to be giving you questions and showing you things. Not only that, it's really a deal. I mean, subscribers get 100 off, so it's 190 for subscribers, otherwise 290. December the 6th, hour and a half. December the 20th, Tuesday as well, hour and a half. January the 10th, hour and a half. And I tell you right here exactly what we're going to be looking at, but you know that when we're doing it, I discuss other things of great importance, at least in the Chapman Wave methodology. Check it out. I'm so looking forward to it because the timing for this over the period going into the new year couldn't be better. And you saw it. I showed you every day in my 10-minute charts, any time frame. Look, there it is. There's that support that you're looking at. I'll teach you about those. So think about it, and I will be back with Tom O'Brien this afternoon. Otherwise, see you tomorrow morning. If you're not here, have a great Thanksgiving.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,